Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today in our EIA show, we're going to break it up into our normal three parts in terms of overview, refined products, and then exports. But this time we're really going to kind of roll in what's happening with the hurricanes now that they're hitting. What did it look like when Harvey hit? Because right now it's expected that Hurricane Laura is going to hit as a category 4. So with Harvey being a 4, we're going to kind of compare and contrast to see what is going to happen and how quickly can things recover depending on what the fallout is. So just really diving into it, we're just going to look at, this is kind of a screen that's looking at how many platforms and rigs are in the Gulf of Mexico as things have been moved and we've already started to see shut-ins. So right now, if you look at just on an oil and natural gas side, at this point, there's about 1.5 million barrels, or 84% of the Gulf of Mexico has been shut in. That started during Marco, and that's just obviously increased with Laura and just the intensity, and about 64% of natural gas, which is about 1.6 to 1.7 MMcf a day. So you get an idea now. That's about 90% of what Katrina was. So we're just to give you an idea of the magnitude of the shut-in, just given what's actually occurred. And then when you look at just the trajectory of where Laura is expected to hit, it's going to be right on the border between Texas and Louisiana. And you can see that there's a clear amount of refiners and as well as racks. And a rack is just something where you load diesel and gasoline onto a truck. And you can see it's going to cut right through. So we've already seen about 2.9 million barrels a day of refining capacity, or about 30% of Gulf of Mexico capacity get shut in just ahead of the storm. Now, some of that was already getting shut down just due to lack of demand and just getting ready for shoulder season. But the question is going to be how much of that is going to come back once Laura passes through. Now, the U.S. Coast Guard has already closed ports in Port Arthur, Beaumont, Lake Charles, Houston, Galveston, and Freeport, and as well as Texas City. So you're getting an idea of just the size in terms of what's already being hit. Now, just because we're going to start talking about Harvey and what the differences are and where things can happen. Now, when we look at Harvey here, you can see it got stuck in place. Now, when Harvey got stuck in place, you can see it kept lashing Houston and the Houston ship channel, which is why you had such a huge storm surge among obviously just the sheer amount of rain as it just sat over the area. And it really created a huge amount of problems and disruptions throughout the energy space. It also hit a large part of, at least in certain areas, the Eagle Ford in terms of production. So the issue was production really dipped just because not only on the Gulf of Mexico side, but also on land. And we really shouldn't see that, because right now, the Hurricane Laura should move relatively quickly and not get stuck. Obviously, things can change. It's the weather. It's a hurricane. We all know how rapidly the weather can shift. But it's just trying to look and really gauge what are the issues as we start to project forward. So when we get into the numbers for last week, you can see that there was a total draw of 6.45 million. Once we start factoring in the SPR, because obviously the SPR is starting to draw down. Now, the crude production went up by 100,000 barrels. Again, this is a calculated number. It's a little bit higher. And this will start to reflect the issues that we've seen with Hurricane Laura really shutting down. And this is where we can look at, okay, well, what's happening with crude production? So in 2020, obviously, it's hard to compare apples to apples just given the amount of production that we've grown. But you can see the quick drop-off and the quick recovery during Harvey. And that was really driven based on, it was only really the Eagle Ford that was impacted from a flooding standpoint. And the Gulf of Mexico has the capacity to come back very quickly. Just because you get personnel off, you protect the asset, you shut it down, and then you get back on, make sure everything's fine, and then turn it back on. So it's a little bit easier to do that versus an onshore situation. So we would expect a similar recovery. The question is going to be, with production coming back relatively fast, where is demand going to come back? And we're looking at demand in terms of refinery utilization rates. So when we look at total inventories, and again, we're always going to include the SPR just given the storage component, you can see that we continue to get a draw. Now we're really kind of pacing where we should be, or at least trying to kind of draw down. But again, it's kind of a mishmash of what's actually happening, because we had imports that were relatively flat, but we had a big increase in exports, as we discussed last week was going to happen. So now that those exports have increased, we're going to get a lot of noise now that you had boats that had to leave and move away from the different harbors due to being shut down and the hurricane. So you're going to get some lumpiness in terms of what's going to happen over the next couple of weeks. But this was something that was really driven just based on an increase in demand for refined products. So you had an increase in refinery utilization rates, which helped pull through. And then you had an increase in exports that helped really draw down that inventory. And that's where we can see it really accelerated in PADDIII. PADDIII had a decent acceleration. Imports were relatively flat to down slightly across all 4 out of 5 of the pads, because the West Coast actually had a decent increase. But this is something that we're going to look at in terms of PADDIII, because we should see a pretty big increase in inventories, as depending on when do the refiners come back versus when does that production come back. And typically production will lead the refiners coming back. And we already know out of that 2.9, at least, let's say conservatively 500 doesn't come back, just because it was already planning on going down. But then how much just stays down, because we were already heading into that shoulder season. So then when we start looking at the specific numbers into imports, runs, and implied demand, we can pick up with imports. So we saw the biggest increase in the West Coast, or that PADD 5, which is the highest since September. So you're starting to see a little bit more pull through. That is actually relatively big in year over year, as well as the 5-year average. So that was a big increase. The Gulf Coast had a small decline, and that's again, it's lumpy. We should see another decline, just given obviously hurricane issues. PADD 1, PADD 2. PADD 1 is going to have a little bit of an increase, but again, that's just that lumpiness. We're also going to get a big surge over not so much in August, because we're pretty much done with August, but in September in terms of new gasoline coming in, but we'll talk about that in a little bit. And that's really just looking at runs. So we had a big increase of about 1.1% crude utilization rates, but again, that's going to come off very quickly, specifically in PADDIII. As right now, as of last week, we had 7.9 million barrels of throughput. That's, you have to, obviously 2.9 coming down. So we're going to be at about 5 million through this week, and then depending into next week. So you're going to see that big drop off in runs. Now, the benefit, again, is just going to be looking at the implied demand. These are calculated numbers, so it's important to appreciate how they look, and it's always important to look at the 4-week rolling average. But we had a nice bounce in gasoline, which makes sense if you consider we had hurricanes coming through. We had some resurgence in terms of some of that demand coming back in key areas, the last push before Labor Day. Because if you look at the way the EIA normally does things, and if we look at this seasonally, typically the EIA is picking up when things are pushed into the market, not really what's being responded on the market side, but how is it being pushed through. And we had some issues. We had the Colonial Pipeline that went down. That is now back online. So you saw that big push coming through. And at the same time, everyone's gearing up for Labor Day weekend, the last real surge in driving demand. And you're seeing those numbers get reflected here, where they're pushing it into the market to really prep on the local level to make sure it's in all the pads, everyone's ready for those racks to start filling up and pull things into, and then backfill as people go to the pump, start getting prepared for their last hurrah, if you will, as they go into their final vacation mode. And that's where we start looking at floating storage. So floating storage came down. Again, it came down, but it's going to be relatively flat. We should see an increase in floating storage, just again on those delays of when ships show up, that slow steaming, but also just the hurricane really impacting how quickly we can get the offload from ships on shore. So this is going to see an increase closer to the 5-year average. But again, nothing crazy in terms of what we're seeing over the next couple weeks. Depending on the damage to the harbor, could impact this over the longer term. And by damage to the harbor, it's what happened to the docks. Was there dock damage? Was there any pipe damage? Was there anything that has to be fixed before we can see a normalization of activity, which could increase the amount of storage? But again, those are things that we'll know more about next week. And then when we're looking in terms of the imports, again, the import data remained relatively low just because it was matching up with what's in storage. There's a lot in storage, so there's a lot to pull down. There's less in floating storage, so that's where you're kind of getting this disconnect. Again, these import numbers will remain low through PADDIII just because of weather issues. Now, the bigger thing that we like to look at is really, let's take a breakdown between 2017 and 2019, because 2017, obviously, you had Hurricane Harvey, you had a large step down in terms of refinery capacity. And it's important to see we had a big drop, and then we only recovered about half. And that's because by the time we recovered, based on fixing the damage, making sure everything was fine, by the time that was done, we were past Labor Day. We were now in shoulder season, so we didn't see the same amount of capacity come back up. We're going to get another drop down that's going to be similar to that, not so much in just the size, but in terms of total amount. We're going to get about 2.9 million barrels. The question is going to be how quickly, and given where we sit versus 2019, we were coming from about, let's say, 96% utilization rate, where right now we're at 82%, and then you can see that severe drop. So we're going to get a drop like that, and it's just unlikely to see any kind of real recovery back to where we started, just because of where we sit in the seasonality aspect, and then really where is that demand, which remains lackluster, which is something that we're going to talk about later tomorrow in our economy show in terms of that mobility data. But we continue to see those issues, which we'll talk about in the next segment when we really start going through refined products piece by piece.